So in this video, we're going to take a look at the tax system and have an overview of tax. Now, Einstein said that the hardest thing in the world to understand is the income tax. And why it's so difficult? Why it's so difficult? It's because we try to learn all the rules. Now, that is a lot of rules to remember, and we feel overwhelmed. So the way we want to do it is conceptual, intentional, and strategic learning. And later on, you will see that. I actually coming from an intention to save tax. And then I came up with 3 strategies. There's only 3 strategies. And then from that strategy, you use that strategy as a context, as a frame to understand. You know, human beings only see what we want to see, right? So you have that frame, you have that filter. Now you can filter the information, let the information all flow into you, fall into these frames. Okay? And then also, given that there are so many tax rules and strategies, right? So we want to just capture the most important ones, the most money-saving ones. So Maharshi Yogi said, be friend with the prime minister, you'll be friend with the country. So we captured the most important ones. So what are the 3 main tax strategies we talked about, and I talked about? So 1 is earn as much non-taxable income as possible. 2, make the most of adjustments to income, deductions, and credits. And 3, shift the income to other taxpayers and other tax years. So first we need to understand what's the context of tax law. What are the intentions of tax law? Is the government just want to get your money? You know, and how to be a good citizen for yourself, for a business, for a family, for a community, for the world? Now, what kind of society we live in? So tax law actually is a social policy encouraging your behavior to take care of yourself, your family, your business, your community, and the world, so that the government can do as less as possible. So if you really are a good citizen, you want to learn the tax law and to use and take advantage of the tax law so that you are taking care of yourself and your family and your business and your community. Okay, so that's why you know just the tax law will encourage you to save tax, and then you should do that. And there's, you know, throughout the world, every country is trying to do that as well. So, so looking now with the context, we want to look at the content, and the way we want to look at it is look at the structure, overall structure, and then within the structure, within a component, there's more components. We look into this way, and I use 4 components because really, you know, my brain can't capture more than 4. So if you can remember 4, even if there are 14, if you remember 4, that's most important to you, that you can apply, that's a winning situation. So the overall structure of tax is basically, first you add the taxable income together, and then there's an adjustment. Then there's a called standardized deduction or itemized deduction. Then you minus the qualified business income, you get the tax. And then if there's any credits, you subtract that, that's your tax bill. Okay, so so really we're looking at the income and adjustments to income, itemized deductions or standard deduction, qualified business income deduction, and tax credit. Okay, these are the main 4 components. So put it in a more illustrative way, you have the income and there's adjustments to income. And then you get the adjusted gross income, and then you minus standard deduction or itemized deduction, and then minus qualified business income deduction equals taxable income. Then time the tax rate, you get a tax liability. Minus tax credit and minus tax paid over the year, then it's the refund or additional tax liability. That's it. That's the tax formula. So what are the 4 large components of tax, and what are the 4 components within each of the 4 elements? So income, it's easy to understand. You have wages, business profit, capital gain, rental, real estate, royalty, partnership, S corp, trust, like that. So now most of us start with wages, and then gradually we have our own business, we have business profit, and then the real money starts to come in when you have capital gain, and then you have rental, royalty, partnerships, S corps, trusts. That's where the passive income starts to come, and that's where you actually build the wealth. So that's so learning tax strategy is also learning wealth building strategy. And adjustments to income, you have the HSA, IRA, student loans, etc. Itemized deductions, these are some examples. Medical expense, above 10%. There are better ways that if you have a business, this is just your employee benefit. So you don't have to be subject to the 10% AGI floor. Okay, otherwise only medical expenses that's above 10% AGI is deductible as part of the itemized deduction. And also remember, if it's your item deduction is smaller than your standard deduction for married, it's a $24,000, $24,500 to 2019. Then all of these are irrelevant. Okay, the items deduction is not relevant at all. Then the qualified business income, you absolutely want to take that. And then the rest of it are tax credits, child tax credits, and if you own a business, there are a lot more credits, R&D credits, paid family leave, all of these. Okay, we'll just pick some example. Research and development, up to 20% cost, up to credit for $250,000 to offset payroll tax. So that's a very good tax credit, especially if you are research and development related company or technology. And even if you're not a technology company, even if you just develop your product or develop your process, that's still qualify. So, so the three main tax strategies are earn as much non-taxable income as possible, make the most of adjustments, and shift income to others. Okay, so here are examples of non-taxable income, which we will talk in another place. Okay, so I think today for this video, it gives you a good overview, and we'll have other videos to dive deeper. Thank you.